Well, good afternoon, everyone, and welcome to the Trade Station I Want to Be a Trader series. Today, our presentation is entitled Becoming a Fibonacci Pinball Wizard. I know everybody's excited about that. Our presenter is, or presenters, are Avi Gilbert and Garrett Patton, the founder and chief analyst of ElliottWaveTrader.net. My name is Don Prattle. I am the Director of Trader Development here at TradeStation, and I'm very happy to welcome both our presenters and all of the attendees today. Thanks very much for helping us out with this educational presentation. Now, this presentation is for educational purposes only. All the symbols and all the trading ideas that we're going to discuss here are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business. Active trading may not be suitable for you. It's not suitable for everyone. Options trading carries a high degree of risk and is not suitable for all traders. So please take a careful look at the disclosure information, particularly the characteristics and risks of standardized options and the other disclosure documents that I've placed in the chat panel for your reading pleasure. Also in the chat panel, you should find the TradeStation upcoming events. All of our January and early February webcasts are now listed. If you have a TradeStation platform and you'd like to customize it, we offer a premium platform customization and setup service that you can tailor your platform to your own unique needs. Schedule a private 60-minute one-on-one session with a seasoned TradeStation platform expert. This includes platform training, trading environment setup, and customization. So make that online reservation now. So we're all ready here, Avi and Garrett, to become Fibonacci pinball wizards, and I'd like to turn things over to you right now. So welcome aboard, folks.
Thank you so much. First, I'm going to apologize. This is Avi, by the way. I'm first going to apologize for my voice. I've been a bit under the weather of late, so I do apologize if I get interrupted by a cough. So I am sorry up front. But I'm just going to start with a little bit of history. Take you through our Fibonacci pinball methodology from history through application. So I'll just start from the beginning, starting with from the times of R. and Elliott. The world basically applied Newtonian laws of physics as the primary tool for analyzing stock markets. Basically, these laws provided that the movement in the market was caused by outside forces. Now, Newton formulated his external laws of causality into three laws of motion. A body at rest remains at rest unless acted upon by external force. A body in motion remains in motion in a straight line unless acted upon by an external force. And the third, for every action, there is an equal and opposite reaction. So the common belief was, and unfortunately still is, that a stock will remain in motion in a straight line unless something acts upon it like news or earnings to change its direction. However, as Einstein stated, during the second half of the 19th century, new and revolutionary ideas were introduced into physics. They opened the way to a new philosophical view differing from the mechanical one. Now, even though physics has moved away from the old Newtonian mechanical viewpoint, sadly, our financial market analysis has not. As we all know, most market participants are looking for the next piece of news that is supposedly going to move the market. So when they hear a positive news event being reported, they automatically assume that the market will respond positively. But we've all seen markets sell off on positive news. And it's had made many market participants scratching their heads in disbelief. And it unfortunately causes losses in their trading accounts. In fact, I can no longer count how many times I've heard fundamental analysts claiming that a market rally or decline just does not make sense or is absolutely wrong based upon their fundamental analysis. I mean, how many times have we heard analysts state that the market is just not trading based upon fundamentals at this time? As Elliott put it, in the Dark Ages, the world was supposed to be flat. We persist in perpetuating similar delusions. Eliot urged that we move away from such misdirected analysis and view that external events affect the market only insofar as they are interpreted by the market participants. Such interpretation is guided by the prevalent social mood internalized by the investor community as a whole, including all of you. Therefore, the important factor to understand is not the social event, the underlying social event itself, such as the news, fundamentals, or the earnings, but rather the underlying social mood which will provide the spin to an understanding of that external event or information is what's key. This simple premise now explains why markets sometimes rise when seemingly bad news or fundamentals have been announced, and why markets go down when seemingly good news or fundamentals have been announced. When the social mood is within a positive trending wave structure, bad news is seemingly discounted, and only good news is seemingly focused upon. And the reverse is true during a negatively trending social mood. So is it really the news or the fundamentals that are moving the market? The answer is obviously no. It's the prevailing sentiment which interprets the news or fundamentals that moves the market. So let's take a look at an Elliott wave structure so we can see how we track movement of market sentiment. Elliott theorized that public sentiment and mass psychology move in 5 waves within a primary trend and 3 waves within a counter trend. Once a 5-wave move in public sentiment has completed, then it's time for the subconscious sentiment of the public to shift in the opposite direction, which is simply the natural cycle within the human psyche, and not the operative effect of some form of news. This mass form of progression and regression seems to be hardwired deep within the psyche of all living creatures, and that is what we've come to know today as the herding principle, which gives this theory its ultimate power. What gives Elliott wave analysis the power to determine where those turns in public sentiment will occur is Fibonacci mathematics. Allow me to take a few minutes to digress a bit into who Leonardo Fibonacci was and the significant impact he left upon our world. After the fall of the Roman Empire in 476 CE, much of European advancement in mathematics and philosophy was either lost or simply remained stagnant. Although there is a difference of opinion among historians regarding the classification of the period after the fall of the Roman Empire, this period commonly became known as the Dark Ages. Among recent historians, the Dark Ages lasted until around the 10th century. Around 1170 CE, Leonardo Pisano Bogolo, or more commonly known as Leonardo Fibonacci, was born to Guglielmo Bonacci, a wealthy Italian businessman. To give you some reference during which time Fibonacci lived, the Leaning Tower of Pisa was being constructed at the time. While Leonardo was still quite young, his father was appointed as an official at a port east of Algiers in North Africa. It wasn't long until Leonardo was traveling with his father through the Mediterranean. It was during this period of time that Leonardo learned about the Hindu-Arabic numeral system and recognized that these numerals were simpler and more efficient than the Roman numerals being used in Europe at the time. It was not long thereafter that he published his famous book, Liber Abaci, Book of Calculation. This book was a key turning point in European mathematics, as it introduced the European community to one of the greatest mathematical discoveries of all time, namely the decimal system, in addition to the numeric system which we still use to this day. This was considered to be the most important advancement in mathematics since the start of the Dark Ages. But also included in this major work, Liber Abaci, Fibonacci worked through a mathematical problem which led him to the discovery of what we call today the Fibonacci sequence, which is based upon phi, or the golden ratio or golden mean. Within this sequence, each higher number is the sum of the prior 2 numbers, and the ratio of any 2 consecutive numbers approximate 1.618, or its inverse, 0.618. The higher you move through the sequence, the closer you move towards the 1.618 or 0.618 relationship. This 0.618 number has been referred to, as I said before, as the golden mean, and we also refer to this number as phi. But what makes phi even more unusual is that it can be derived in many ways and is exhibited in relationships throughout the universe, such as proportions within the human body, plants, DNA, the solar system, music, population growth, and yes, why we're all here, the stock market. Phi is the one underlying constant throughout all of nature and governs all the laws within nature. In fact, the greatest minds of history, such as Pythagoras, Plato, and Kepler, all felt that phi was the secrets to the universe. In 1941, Elliott stated regarding the financial markets that these Fibonacci ratios and series have been controlling and limiting the extent and duration of price trends, irrespective of wars, politics, production indices, the supply of money, general purchasing power, or other generally accepted methods of determining stock values. In recent times, we've even seen evidence that phi even governs man's decision-making. Social experiments have recently been conducted, which resulted in price patterns based upon a mathematical standard that mirror those found in the stock market. This basically means that mass decision-making will move forward and move backward based upon mathematical relationships within their movements. This is the same mathematical basis with which nature is governed. The same laws that were set in place for nature also govern man's decision-making in mass and even on an individual basis. Now we know that movements in markets occur within waves as discovered by Arnon Elliott, and we know that decision-making and changes in trend are governed by Fibonacci mathematics, the properties of phi. How do we apply this to our own trading to generate profits? Well, this is where our contribution to the Elliott wave world comes in. This is something that I observed within the Elliott wave structure and have adapted it to a trading methodology which I lovingly call Fibonacci Pinball. Since third waves in the Elliott wave structure are the strongest and most powerful of all the waves, it's the ideal wave to trade. Furthermore, since third waves themselves have to be composed of 5 subwaves, it helps us determine how we trade this structure in a relatively low risk manner. Let me explain. After the stock market finds a bottom after a correction, it begins a new uptrend. Such uptrends take the form of 5-wave Elliott wave structures. However, what I want to point out is that each of the impulsive waves, waves 1, 3, and 5, are all comprised of 5 waves each, and waves 2 and 4 are comprised of 3 waves each. So effectively, each impulsive wave can be broken down further into another 5-wave structure ad infinitum. This is what we mean when we say the market is fractal in nature. It means that the patterns are self-similar at all different degrees of scale. Now I'm going to hand over the instruction of how we go through the Fibonacci pinball and the rest of the program to Garrett, because unfortunately, like I said, guys, I'm really under the weather and I can't speak too well. So Garrett, please take over. Thank you.
You did great. Thank you, Avi. So now we're going to take a look at Fibonacci pinball and how we actually apply it to charts. So these are just theoretical price charts here, and what we're using is a Fibonacci extension tool to get these red fibs that you see on these 2 theoretical charts. So how we get those fibs is we take the measurement here of wave 1 off the low of that 5-wave Elliott wave structure, and then we project that measurement from the bottom of wave 2. So our 3 points of reference are the bottom of wave 1, the top of wave 1, and the bottom of wave 2. And using our Fibonacci extension tool, that gives us these red fibs higher. So once we have waves 1 and 2 within our impulsive Elliott wave structure, that gives us a roadmap using Fibonacci pinball for the rest of the impulsive structure for waves 3, 4, and 5. Now, as Avi discussed, the impulsive waves, the odd numbers here, waves 1, 3, and 5, should also subdivide into 5 waves each. So within our third wave, you can see another 5-wave structure here. And the most common targets that you'll see for these 5 waves within wave 3 reach are between the 382 extension and the 618 extension for wave 1 of 3. So you can see on this chart, our initial wave 1 reaches the 618 extension, where on this other chart, it reaches the 382 extension. And if your wave 1 of 3 reaches the 618 extension, then your wave 3 of 3 is very likely to reach the 1236 extension. So as you can see here, after reaching the 618, On the wave 1 of 3, we reach the 1, 2, 3, 6 on the wave 3 of 3, and then you'll see your wave 4 of 3 pull back to the 1.0 or the 764 extension. And as long as that support holds, you can expect your wave 5 of 3 to extend up to the 1618 extension next, to complete the overall third wave. Now, if the 1618 extension is reached for wave 3, then you expect your fourth wave to pull back to the 1.0 extension, potentially as low as the 764 in some instances, but generally around the 1.0 extension is where your fourth wave should hold. And then as long as that support does hold, your fifth wave should target up at the 200% extension shown here. So these are the two most common targets that you'll see within an impulsive structure, and we'll go into detail on the second one now, where wave 1 of 3 reaches the 382 extension rather than the 618 as shown on the first chart. So when that happens, usually you'll see your third wave reach the 100% extension rather than the 1, 2, 3, 6. And your fourth wave should pull back between the 764 and the 618 extension. And as long as that support holds, you'll expect your wave 5 of 3 to reach the 1382 extension as shown here, instead of the 1618 as shown on the previous chart. So if you reach the 1382 extension for your wave 3, then you'll expect your 4 to come back to the 764. And as long as that support holds, your fifth wave should head up and target the 1764 extension. So as you can see here, just based on the initial waves 1 and 2 within an impulsive structure in LA wave theory, we have an entire roadmap set out in front of us before even any of the price action has filled out. So this makes it very useful for trading purposes because you can develop and create a trading plan based on those targets and using LA wave rules and guidelines, such as placing your stop below the wave 2 low once wave 3 has started. Or another guideline that we like to use with Fibonacci Pinball is after exceeding or reaching the 100% extension, placing our stop just underneath the 618 extension. Since very often if you reach the 100% extension and then break back below the 618 extension, then about 80–75% of the time you'll see that impulsive structure fail, and so that's a good way to get out when things are not playing out according to plan. So now we've looked at those theoretical charts just to give you an idea of how Fibonacci Pinball works. Let's take a look at some actual examples now. So this is one of my favorite examples to show when teaching Fibonacci Pinball and LA wave theory because it does a really beautiful job of illustrating the fractal nature of markets and price charts. So what we're going to do first is take a look at this hourly chart of the Nifty, which is a major index in India. And we're going to apply Fibonacci Pinball to this impulsive structure off of this August 2013 low. So we have our initial move up off that low, which creates a 5-wave structure as wave 1, and then a corrective pullback as wave 2. So now that we have our waves 1 and 2 in place, we can use our Fibonacci extension tool to measure the length of wave 1, and then project that measurement from the bottom of wave 2, giving us these red fibs higher. So as we can see here, our initial move up as wave 1 of 3 reaches the 618 extension here before we consolidate in wave 2. So based on our wave 1 of 3 reaching the 618 extension, we can expect our wave 3 of 3 to reach the 1236 extension next. And that is what we see here before the consolidation is wave 4, which comes back to the prior fib at the 100% extension. So as you remember, I mentioned that your wave 4 of 3 should hold between the 100% and the 764. So as long as that support holds and you reach the 1236 on your wave 3 of 3, your expectation for your wave 5 of 3 is to reach the 1618 extension. And that's what you see here on this chart. And after reaching the 1618 extension for your third wave, typically you'll see your fourth come back to the 100% extension. In this instance, it dipped a little bit lower than that, but as I mentioned, sometimes you do see charts come down to the 764, which this chart did come a little bit closer to. But as long as we don't have overlap between our waves 4 and our wave 1, then there's no issue with this impulsive pattern. So now that that support has held and we reach the 1618 for our wave 3, the expectation for our fifth wave is to head up to the 200% extension next. And that is what we see here. So when we first started with this chart, I mentioned the fractal nature that this chart really illustrates very well. And so what we're going to do next is zoom into this fifth wave here on a smaller degree time chart, and you'll see the same Fibonacci pinball playing out within this 1, 2, 3, 4, 5 wave structure within this fifth here. So we've zoomed in here. Those blue fibs were previously red on the prior chart, and now these red fibs are measuring the length of this wave 1 of 5, and then projecting that length from the bottom here at wave 2. So we have these fibs going higher here. Our initial wave 1 reaches the 618 extension again. That means that we should assume our wave 3 of 3 should reach the 1236, which is what we do see. Our fourth comes back to in between the 100 and the 764, holds that support, and based on that we should expect our wave 5 of 3 to reach the 1618 extension. In this instance it came a little bit shy of reaching that fib, but what you see next within this fourth wave consolidation is what happens very often when you see a third fall a little bit shy of its target. And that is you get an expanded flat here where the B wave, the corrective 3-wave structure that breaks down into an ABC, the B wave within that structure comes up and tags that fib before coming back down to the 1.0 here and our wave C of 4. And after holding that support, we can expect our wave 5 of 5 to reach the 200% extension, which you can see also lines up with that larger 200% extension fib. And that's when we top and put in, finish our 5-wave structure up off of that August 2013 low in the Nifty. So we'll just go through a few other examples here. As you can see on this chart, we have an initial wave 1 and 2 up off the low. And then within our third wave, our wave 1 of 3 reaches the 382 extension rather than reaching the 618. So this is that second chart that we looked at in the theoretical examples where we get a little bit less lofty targets above, and rather than expecting the 1236 extension to be reached on our wave 3 of 3, instead we're expecting only the 100% extension. So we push slightly beyond there for our wave 3 of 3 in this chart, consolidate briefly in our wave 4 of 3, and then after reaching the 100% extension, our expectation is the 5 of 3 should reach the 1382. So that's what we see here before our next consolidation as a fourth wave, which takes us back to the 1.0. And based on reaching the 1382 for our wave 3, our expectation is the 5 of the fifth wave will reach the 1764 rather than the 200%. So that is again what you see here before the next consolidation. And this is actually within a third wave. As you can see here, the larger labels 1, 2, 3, and then a fourth there. Our next example is from MetLife. As you can see here, we have a 5-wave structure as a leading diagonal up off of this low back here in 2012, and then a corrective consolidation as a wave 2. So we have our 1-2 setup. We take the measurement of our wave 1, project that measurement from the bottom of wave 2. That gives us our fibs going higher so that we can create our trading plan based on Fibonacci Pinball. So our initial move up as wave 1 of 3 reaches the 382 extension, and based on that we're going to expect our wave 3 of 3 to stop at the 100% extension. So that is what we see here. And then we consolidate in our wave 4, and then after reaching the 100% extension, our expectation again is the 1382. So in this example, we actually do extend beyond the 1382 to the 618, the 1618 instead. But even if you were to take profits at that 1382 extension based on your target from Fibonacci Pinball, you're really not missing out on much getting that last little move up, since it was reversed right afterward. So when you do see examples like this one where one of the waves, the subwaves within the larger structure does extend, your expectation is that the following waves will extend the same relative amount. So we extended 1 fib higher here in this wave 5 of 3 past the normal 1382 extension, and therefore rather than coming back to the 764 for our wave 4, we're going to expect that it holds the 1.0. And that is what we see here. And then rather than stopping at the 1764 for a wave 5, we're going to expect that it extends 1 fib higher to the 200% extension, and that is again what you see here to finish off this wave 5 here of a larger third. So I also wanted to add a couple of more recent examples where we have Stillwater Mining, and it's had an impulsive move up off of the 2016 low here. So once we have our initial 5 waves up as our wave 1 and a consolidation in a wave 2, we can draw our fibs, again measuring the length of wave 1 and projecting that measurement from the bottom of wave 2. So that gives us our extensions higher. And we can see here our initial wave 1 of 3 reaches the 382 extension. we're typically going to expect our wave 3 of 3 to stop at the 100% extension. However, this is an example of when you get more serious extensions within the impulsive structure. So again, you're going to adjust the rest of the targets the same relative amount based on how much that subwave extended. So in this case, our wave 3 of 3 actually comes all the way up to the 1382 extension, rather than stopping at the 100 or the 1236. So based on that, we're going to look for 2 fibs higher on the wave 5 of 3 as well. So we see it passed the 1618 and instead reached the 1764 here for our wave 5 of 3, and then we get a pullback to the 100% extension in our 4th wave. And based on that same relative extension, we're looking for another fib higher, or 2 fibs higher here, past the 200% extension for our 5th wave, and that is what you see to finish off this impulsive structure as waves 1, 2, 3, and 4 in still water mining to finish 5 waves up in that impulsive structure. And then the final example that I have for you guys here is from the Hang Seng, also from earlier this year off of the February low. We have an initial 5 waves up as our wave 1 and a corrective consolidation here as wave 2. So we take the measurement of wave 1, project that measurement from the bottom of wave 2, that gives us our fibs going higher, and we can create our trading plan based on that. Our initial wave 1 of 3 reaches the 50% extension, so we're going to expect our wave 3 of 3 to reach the 1236, and that is what we do see here. We consolidate in a 4th that holds the 764, and then get our 5th of our 3rd up to the 1618. We get an expanded flat here for our 4th wave that comes back to the 100% extension. And then you do see, rather than stopping at the 2.0 here, an extension in our 5th wave that takes us 2 fibs higher. But again, if you were taking profits based on Fibonacci Pinball at the 200% extension, again, you're not really missing out on much, especially since price reversed very strongly once this 5th wave did complete here. So again, that covers all of the examples, and now we'd like to jump into any questions that you guys have and hopefully answer them for you. First question from Pam is, can you please show our current count on an index, say the SPY or the QQQ? So we are actually unable to give forecasts in these webinars. So if you are interested in forecasts for, as you say, the example SPY or the Qs, I highly recommend you head over to our website, elliowavetrader.net. You can sign up for a free 15-day trial with no credit card required, and you'll easily be able to find analysis on those 2 ETFs and thousands of other stocks and markets that you may be interested in as well.
I do want to add something to what Garrett said earlier about still water mining. In the metals complex, and often in most commodities complex, excuse me, you will get larger than standard extensions. So we almost come to expect larger than the standard extensions whenever we're analyzing any commodities complex, especially gold and silver or any of the mining stocks that go along with it.
Right, and especially within the 5th wave of that impulsive structure, that is the wave that typically does extend in commodities. So we may have a relatively short webinar here if you guys don't have any questions. Pam is the only one that I see so far. Here comes one from Jeff. Is your live chat run by your best analysts yourselves, or is it clouded by 30 subscribers' opinions? Well, we don't discourage that our subscribers are able to post alongside the analysts, but we do have filters on our site. So if you're uninterested in seeing any of the other members' posts, you can easily filter them out and only have the analysts or staff posts show up. So if you choose to do so, which actually is something that I would recommend for newer users to the site, so that there's a little bit less clutter and a little bit less noise when they're first joining, because there's a ton of information on the site that can seem a little bit overwhelming at first.
And during trading hours, I'm pretty heavy-handed with what people can post. I usually don't allow anything outside of actual trading, actual analysis being posted in the room.
All right, our next question is from Young, and he asks, how do you identify the first wave? So typically what you're looking for is the initial move off of a bottom after a corrective pullback. So after you see a decline in the stock market, a major correction, that's usually where you're going to be looking for your initial wave 1 and 2 up off of a low is the start of a next impulsive structure to the upside. Or if you're trending downward, in that case, to the downside. So major lows where you'd usually start a count on a stock, for example, would be maybe the 2008 or 2009 low. If you're looking at a weekly chart, or if you're looking at a daily chart, maybe the recent lows that we had in February of 2016 would be a good place to start. But usually after those corrections is where you're looking for the start of a new impulsive structure, and then also fitting that count within a larger count that you may have on that chart.
And
Since again we noted that they're fractal in nature. Sorry, go ahead, Avi.
And it doesn't come out of nowhere. Normally, you're actually, we'll try to identify the region from which we're looking for a change in trend. That's what this helps you with so often, identifying where the change in trend can occur. So we look for areas of a change in trend, and once we have a 5-wave structure off that change in trend, then you know, okay, it's time to go into a different mode. You're now moving back into your bullish trend, and on the wave 2 pullback, that's when you start going into your bullish trading pattern.
All right, next question from Far is, do you have an example for a 5-minute chart? Unfortunately, we had to put together this PowerPoint and submit it before the webinar began, so I don't have any other charts that I can pull up. But as a note, yes, because of that fractal nature of the markets, Elliott wave theory and Fibonacci pinball works on all time frames. So if you were a short-term day trader, you could certainly use it on a 5-minute chart as well and see the same effectiveness. Next question from John is, in an ending diagonal, can wave 4 exceed wave 2? No, it should not be making a lower low past the wave 2 low. That would invalidate that ending diagonal structure. Francis asks, why do people start the Fibonacci lines from the lowest price action instead of at the wave 2? My answer would be that they're not using Fibonacci pinball, or they don't know about it. So there's many different ways that people use fibs in the stock market. This is a methodology that Avi came up with based on light wave theory, as he mentioned, and just noticing the same pattern repeating over many charts that he had been watching over the years. And so it's kind of a different way of looking at fibs, a different way of approaching light wave theory, and really gives you a great framework for creating a trading plan based on those fibs. And next question from Jason is, what time frame is most effective in Forex? What's most effective is really what you're most comfortable with as far as trading. So if you feel that you do best as a short-term trader, then you're probably going to want to look at smaller time frame charts, an hourly and below. If you think that you are more comfortable as a swing trader, then probably an hourly chart or above. Again, because of that fractal nature, it works on all time frames, and it really depends on what kind of trading you want to be doing.
As an adjunct to that, Jace, my suggestion to you is try fib time frames. In certain products, I have found 21 minute or even 144-minute time frames have been unusually prescient in identifying moves. So, play around with it. I personally use 8-minute, 21-minute, 144-minute. So play around with it and see what works for you. But in different products, you can see differences in the time frame at times.
Next question from Hema. Although markets are fractal, what's the best time frame that works daily? So I was actually just answering that question there. So yeah, the common ones are daily, 60, 15, 5-minute. But as Avi said, he's found that using less common Fibonacci numbers for those time frames has been beneficial for him. Next question from Thomas is, do you use any other tools to help you identify your waves? Yeah, we use just traditional technical analysis as well, oscillators such as the RSI or the MACD, and what you're basically doing with those oscillators is helping solidify or support your wave count based on those technicals. So usually what you want to see in an impulsive structure is your third wave exhibiting the strongest technical readings on a MACD or an RSI. So if you see negative divergence in what should be a third wave, that would be a warning sign that perhaps it's not a third and instead a C wave of a corrective structure.
And in our library on our website, Garrett has done a whole host of webinars. One of the webinars he's done was specifically on utilizing technicals to support or invalidate your Elliott wave count. So I think you may be interested in something like that.
And other technical patterns, such as inverted head and shoulders, a lot of the technical patterns, such as rising wedges, etc., are actually patterns within Elliott wave theory. But if you see, for example, a head and shoulders pattern on a 1-2 setup, that's just something to add to the confidence of that trade. Next question is, when Avi says this is textbook for first, but we have many examples in commodities called oil that start major moves up with only 3-wave moves. Any comments? My comment would be that a lot of times what looks like a 3-wave move is actually an extended fifth within that impulse. So because you're getting a much larger fifth wave than normal, it sometimes can look like an ABC. But if you actually break down the subwaves and look closely at them, you can notice a 5-wave structure and identify that extended fifth. Do you have any other comments to that, Avi?
No, it's either that or sometimes it may look overlapping. It may just be a leading diagonal coming off a low.
Right. And sometimes you do get a leading diagonal. It seems to be happening more often lately.
Yeah.
Thomas asks, can you show an example with the RSI? So we should be able to find one of the previous charts here that shows an example. I actually only have the MACD in my chart, but as you can see here, our wave 3 of 3 shows the strongest technicals. We did have an extended fifth, so you saw strong technicals there as well. But within this structure, you see the wave 3 had a very strong move here on the technicals.
One of the
same thing with our wave 3. Oh, sorry.
I'm sorry.
Go ahead.
Go ahead. I'm sorry.
I was just going through the charts and showing the highest MACD point on our wave 3 in the heart of that third wave there.
The issue that a lot of people have is when they start seeing negative divergences in their technicals, they assume the market's topping. But if you understand the structural nature of the Elliott wave pattern, you recognize that you start getting your initial negative divergences in the fifth of third wave. So when people think they're topping, you literally have 2 larger, more waves to go higher before the top is actually struck. So you have to understand this, the technicals within the context of the structure, which I probably would say most people don't, because once they see their first negative divergences, they're always looking for an immediate top.
Right. So as you can see here on this chart, our strongest technical point is in this heart of the third wave on our wave 3 of 3. And then we begin to see negative divergence from there on, which if you saw this and we're shorting right here based on that negative divergence, initially that trade may start to look successful, but then you end up grinding higher after that as the rest of the wave structure finishes. Let's see if there's another good example. Yeah, you can see here that our strongest technicals are also in the third wave on this chart. Next question from Kelly is, if you miss the wave 2 entry, where is the next opportunity as the 5 waves trace out? So your next opportunity, if you miss that initial wave 2, is going to be entering on the wave 2 of 3. So you watch for your next initial 5 up as your wave 1 of 3, and then you enter on your wave 2 of 3 using a stop below the prior wave 2. And actually, a lot of people trade that way. It's a little bit more conservative way of trading rather than trying to catch the bottom of this wave 2 and maybe layering into position with a stop below your initial wave 1 low. So just slightly more conservative approach if you wait for the 1-2-1-2 setup. Next question from Jerome is, do you provide wave counts for futures, FX, etc. as well? Yes, we have a service for Forex, and as far as the markets go, yes, we pretty much cover all the futures, TFES, NQ, along with the cash charts as well, SPX, RUT, and NDX. Next question from Bob is, a wave 2 can fully correct wave 1. Does the pinball pattern apply? So yes, technically you can have a full 100% or 99% retrace of a wave 1 and still technically be valid. But you'll often see, if that is the case, and it truly is a 1-2 setup rather than an A and a B of a corrective structure, that your third wave will see extensions enough to make sure that the fourth doesn't overlap the wave 1. Or alternatively, you may be dealing with a leading diagonal instead, where you do get overlap, but still produce a 5-wave structure to the upside. Next question from Far is, for day trading, where do you start the first wave? So again, it's really going to depend mostly, if you're day trading, on the larger count. So on all of the stocks and indices that we cover on our site, we have larger counts for, so we're basing kind of our smaller degree or micro counts on that larger expectation from that bigger picture count. And that's kind of where you can use that larger count to identify maybe where a smaller degree micro wave 1 and 2 will be during an intraday move. And the next question from Jerome is, after the 15-day trial, how much is the fee? Well, since we offer a number of different services based on what you may be interested in, so if you're only interested in trading the indices, then you would only need the main market service, but it really depends on how many different services you are interested in, how much that will cost. Next question from Glenn is an example of a leading diagonal. So I think there was one on this chart here. So as you can see, this wave 1 was the leading diagonal, where it still produced a 5-wave structure, but as you can see here, our fourth wave does overlap into the wave 1 territory. So because of that overlap, it is identified as what is called a leading diagonal rather than a standard impulse. And you see leading diagonals at the beginning of a new trend, so in a wave 1 position of an impulsive structure or an A wave position of a corrective structure. Any other questions? No? Oh, looks like we have a couple of people typing here. We'll give it a second.
Oh, that's what that little thing is?
I think so. Next to the name.
Yeah.
Next question from Bob is, your examples have been all going up. Does the process apply for declining issues as well? So yes, it would apply for, let's say you're dealing with a corrective pullback. Let's see if we can find an example that looks decent enough. Well, we'll use this one here. So within a corrective structure, your C wave should also break down into 5 waves. So if we label this as an A, a B, and a C, if we were to apply the fibs here, you could also use Fibonacci pinball within the waves 1, 2, 3, 4, and 5 to the downside within your C wave. One comment that I will make about declines in C waves or impulsive moves is very often you'll see them develop in kind of a series of 1s and 2s, and then you'll get that large drop, the elevator drop, in the heart of the third wave. So they're somewhat harder to identify, the initial wave 1 and 2, because of that kind of series of 1s and 2s that happen, and you don't really get as clear of a 1-2 setup. But once you do identify that 1-2, you can still apply the same Fibonacci pinball for the rest of the wave structures. Next question from Barry is, I believe you cover miners. Yes, we do offer a miners portfolio. So we have a theoretical portfolio that I and one of my colleagues, Zach Mans, manages, and we basically show you what stocks we like most in the sector, provide you with entries and exits, and kind of just run the portfolio based on that. So he asked the next part of his question, he plans on covering junior gold and silver miners. Yes, we do cover a lot of the juniors or the smaller cap companies as well. Even some of those are part of the portfolio, but usually we steer clear of anything under $1. Only a few exceptions for actual portfolio, but for those of the members who do want to trade those, smaller cap lotto plays, we do still provide charts on them, so you can use those to trade with. Next question from Kelly is, what education do you offer on the website? So we actually have an education section that's filled with a library of different articles and webinars that's all free to any of the members. We also offer live coaching, though. So we have a live video that is run 3 times a day, before the open around noon and then right before the close. If you want further teaching and coaching, those live videos are really useful for asking questions and getting clarification on charts, etc. And we actually do have plans in the future for introducing an online course based on Elliott wave theory, Fibonacci pinball, and other subjects that will be coming in the future. Bob D asks, access to this recording. I think that'll be through TradeStation, so either Don or Mike will have to help you out with that question. All right, I think that covers all the questions. Oh, we have one more person typing here, Jeff. Oh, you're welcome, Jeff. So Don says that he has recorded it, and he just posted a link for those of you who want to download it. All right, so I think we're winding down here on the questions. He said it should be available by the end of the week. So seems like a good stopping point for the webinar. I hope you all found it enjoyable and informative. And thank you for checking us out. Again, we do offer a 15-day free trial on our website. So come over to elliottwavetrader.net and check us out. One last question from Rodrigo. Do you offer any one-on-one classes? Those live videos, you will be alongside other subscribers, but you can do one-on-one sessions. So if you have a mic, you can raise your hand and we can talk on the webinar one-on-one with any questions that you may have. So it's pretty much the equivalent of a one-on-one class if you choose to utilize it as such. All right, not really sure the procedure here. I guess you have any other notes, Avi?
I'm good.
No, it's just a slide, so you can't click on this link, but just type in elliottwavetrader.net into your browser.
And thank you for picking up, Garrett. It's easier if I don't talk.
Oh, no problem. I hope you feel better soon.
Thanks.
Okay. Good evening, everyone, and hopefully we'll see you on our site. Take care.